Tell me, what is your name and what do you do in the Bitcoin space?
So my name is Giovanni and I specialize in emerging managers. I make investments into harebrained ideas.
Into what kind of ideas? I'm sorry.
Harebrained.
Harebrained. What does that mean?
Well, most people in my space, in my job, they make decisions based upon what's known as career risk avoidance. So they don't want to risk their careers.
Yeah.
And what I think that conservative investing is dangerous, right? So if you're conservatively invested, you think you're never going to hit the lights out, you're never going to make lots of money, but you're going to be safe, like you're not going to lose money.
Yeah.
And I don't think that's true. I think that conservative investing, not only do you not make much money, you in fact do lose money with conservative investing.
Yeah, because if you miss on one of those conservative bets, you don't have other ones that maybe you like hit a home run on. It's just a bunch of singles.
Not just that, but conservative investing loses money. Like conservative investments lose money. They don't save money. They don't protect money.
Yeah. Why do you say that?
Because winners call themselves winners.
Yeah.
Right. And so if you're smart, if you're powerful, if you're intelligent, if you have an ego, right, you give yourself another positive adjective.
Yeah.
So if you're not a winner and you got to describe yourself in a positive way, you say conservative.
Yeah.
Right? I don't lose. I'm not a loser, right? They're just saying I'm not a loser. But in reality, they're losers. All conservatives are losers. Okay.
Yeah.
They just feel better about losing. You know? So when the market, when someone hits the lights out, right? You think that they're lucky, but you don't think it's so much hard work. You think it's luck.
Yeah.
Right? And so to make yourself feel better about not hitting the lights out, not making lots of money, you go, well, I didn't take risks, so I don't get the rewards.
Yeah.
But let's take, for example, Silicon Valley Bank.
Yeah.
Right?
Okay. Yeah. Let's get into it.
When they got 3 times as many assets, right? They did something safe. They did something conservative.
Yeah.
They bought those treasuries, right?
Yeah, treasuries.
They did not take a risk and it didn't work out for them. They did something safe and they lost money. So that's an example of conservative losing you money. And in fact, it lost them
detrimental.
There we go. Lost them some money and then lost them the credibility of all their depositors, and the depositors ran to the bank.
Yeah, exactly. Exactly. All right. So then what are you here to get out of here at South by Southwest? Are you here for Startup Day tomorrow?
Yeah.
Yeah. I gotcha. Have you have you heard of any of the companies that are going to be pitching tomorrow that have you excited, or are you just coming in kind of blind?
Coming in blind.
That's awesome. Where are you coming from?
Monaco. South of France.
Oh, wow. Okay. Well, welcome. Have you been into the United States before?
Yes. I'm a U.S. citizen.
Oh, okay. All right. I gotcha. All right, cool. So how long are you in Austin for?
Till Sunday.
Till Sunday. Awesome stuff. Awesome stuff. Okay. So then as it comes with the Bitcoin space, right? So how long have you been investing in like other companies, and have you had any exposure to any Bitcoin companies previously?
I'm a triple OG.
Uh-oh.
I'm a triple OG.
Triple OG. Why triple OG? Why not single or double?
Because let me tell you something. Do you know who Charlie Shrem is?
I believe so, but if those in the audience that don't know, why don't you go into who Charlie Shrem is?
He's the guy who did BitInstant, and BitInstant was the guy who facilitated transactions and converting from Bitcoin into fiat.
Okay.
Right?
Yeah.
So I think it was 2009. It may be in 2010. I was at the AVN Awards, which is the Adult Video News Awards.
Yeah.
And I was in the industry section, not the sort of fan section.
Yeah.
And I met this guy who was doing, payment processing and transactions. And we started chatting like we're chatting now. And it's quickly deviated into sort of high finance and whatever. And I was like, wow, I'm at a porn conference talking about high finance when there's women walking around with their tits out and pasties on and stuff. And he was just like going, fiat currencies and blah, blah, blah. And I was like, wow, you really are passionate about this. And his business model was to give people who had Bitcoin and they needed cash to give them cash instantly against their Bitcoin. That when you converted Bitcoin into cash, it was taking 3, 4, 5 days to get your cash. So he wanted to speed up that transaction.
Yeah, I got you.
And
and this was pre-Lightning Network and all that kind of stuff. Yeah,
this is 2000.
Yeah, okay,
9, 10, maybe 11, and so I did a deal and we did some financing, and I didn't know that he was actually the guy who was, I met him at a porn conference, right? So he was doing high risk credit card processing because people get horny at night, signed up for porn websites, and then the next day regret it, and then they call it their credit card company and say, I didn't spend $100 on phone sex last night. What you talking about, right? So the credit card processing has to rebate back the $100 to the credit card holder. So if that is acceptable to you, right? Then Dread Pirate Roberts and Silk Road is not that far away, right? And so he was credit card processing Dread Pirate Roberts. I had no idea about that.
All right, so I think the miss aspect in this story is, what were you doing at this porn conference, man?
So there was a very wealthy individual who had started an internet company when he was a young kid.
Okay.
He came from a very wealthy family, and the family didn't really pay too much attention to what this kid was doing. And so when he decided to get married, they didn't really protect him because he was so young, right? And so his trust fund assets were all protected by the what's known as a family office, protected by the family, and so on and so forth. And he divorced that woman, and it was a brutal divorce. So the next time he got married again, the family office made him, his trust fund baby, the lawyers made him do a prenup with the wife. And the thing is that because he wasn't, because he didn't have a prenup with the first wife, the lawyer said to him, because I can show how much money you brought into the relationship, you were wealthy before you met this woman, I will try to get you a divorce that's not 50-50, right? But you're going to lose a lot of money. So the judge that they got accepted the 60-40, right? But the divorce took a long time. And the lawyer said to him, do not get photographed with another woman, because the judge could get vindictive and turn 60-40 against you. And so he went to a strip club, and he would go to strip clubs. And he ended up marrying one of the strippers.
Oh my God.
And the stripper then created her own website in which she was collecting like $20 a month. And she had
like OnlyFans before OnlyFans.
This was like 2006 or something like that. Oh my
God.
So she had like between 2,000 and 5,000 members paying $20 a month. And so she was going from making tons of money as a stripper to literally tons of passive income, right? She didn't have to strip anymore. She was making boodles more money.
God.
So that girl then, so her husband said, can you help me manage my wife's money? And I was like, how does a stripper make so much money that she needs like high finance services? And so I said, look, I can't help you, but I can tell you what it is that I'm doing, and you can do it for yourself. I have no professional responsibility for you. And she found it useful. So she said, can you please come to the porn awards and tell all the other girls what you're doing? I was like, I can't believe this. I'm being invited to the porn awards. I'm gonna be your date. This is awesome. Okay.
Oh my God.
I'll do that. So
what a world. Oh my God. It brings you to all different places. So that's insane. So yeah. All right. So then you go from, I don't know, from meeting a stripper who's created an OnlyFans for herself, basically before OnlyFans is a thing. And then now you have, you meet a guy at this porn conference talking about Bitcoin. So then now you're here. So,
and actually I pinged the Winklevosses and said, because they have a family office. and I know them. And I said, what do you think about Bitcoin and BitInstant? And they're like, oh, that's on our radar. I'm like, oh, he's coming to a family. I'm bringing him to a family office conference. I don't think it was his first meeting with the Winklevosses, but I don't know. I claim credit that I made the Winklevosses pay more attention to him because I was looking at a.
So you might have helped orange pill the Winklevosses. Is that what you're saying?
No. I think that they were, I mean, they're very cutting edge. I mean, you know, I think that they got so hurt by Facebook that they were looking for something that could be ahead of the curve of even Mark Zuckerberg.
Yeah.
So yeah,
I gotcha.
You know, they're the master. I'm the student. I'm learning from them.
Yeah. Wow. That's incredible. What a story. I mean, I was not expecting to hear all this today, but, okay. So then, you know, you go to the Porn Awards, right? You get kind of, introduced to this guy who's creating BitInstant. And then now let's go from there, right? So have you made any more investments into Bitcoin kind of specific companies? Have you gotten into the, have you avoided, I guess, getting into the, I guess, the shitcoin world where you're like, dabbling into alternative currencies or alternative cryptos or anything like that?
So, you know, like I say, I think that risky investing is more rewarding, right? It's not as dangerous as safe investing, right? So to traditional finance, which is what I'm in, right? Alternative finance or DeFi is, you know, dangerous, let's say. Okay. So within the Bitcoin community, you can imagine I'm not going to gravitate towards the conservative side of crypto. I'm going to gravitate towards the cutting edge, risky side of crypto. So yeah, I've done some stuff in shitcoins and crypto, you know, all that kind of jazz.
I gotcha. So with that, you know, obviously we've had some crazy economic times, right? And we've had some crazy instances with a lot of companies who are kind of operating on you know, I guess the cutting edge or like the riskier side of things, right? Because
so-called riskier.
Yeah, so-called riskier. But I mean, we're seeing, you know, obviously in traditional finance, people point to Bitcoin's volatility and say it's extremely volatile. But compared to, you know, other cryptos, Bitcoin isn't as volatile.
Oh, so now you want to compare yourself to cryptos? Wait a second.
No, I'm asking the question.
Pick your poison. Pick your poison.
No. Let me get to the point right here. Is that it goes higher up, but it also goes higher down. So we're seeing like a tough economic time where a lot of these, you know, alternative coins or, you know, whatever are kind of, you know, either failing or, you know, going down 180% or whatever it is. So with that, you know, obviously there's you evaluate the risk reward ratio when you're investing in some of these companies. How do you evaluate, you know, something when you see, you know, a lot of these industries kind of go either moon to the top and then, you know, come crashing down? Like, is there I guess an investment out there that you think is too risky for you when it comes to this side of things? Or are you just like, hey, I'm open to all of it?
Okay. So Oscar Wilde said, more harm is done not by the things you don't know, but by the things you think you know to be true that just ain't so. Okay. So, volatility is only a problem, right? If the volatility can take you below zero, right? So that's a problem if it can take you below zero. The other problem with volatility is if it is the peaks to valley to recovery, right? So peak, valley, recovery. If the peak to valley to recovery is so far apart that essentially you fall prey to what's known as the market can remain inefficient longer than you can remain liquid. Okay. So if something has it in a period of time, what we would call, let's say, interim volatility, so the peak to valley to recovery is close together, then the fact that it goes up more than, let's say, the market and down more than the market is, in my opinion, safe. But if you think Bitcoin can go to zero, which I believe it can, then you do have the potential for risk of ruin. So the volatility of Bitcoin, in my opinion, means that it's in fact a safe investment because you can time the entrance, time the exit. You don't have to time the top, right? If it's very volatile, just get out.
Below,
well above its last high, right? And get back in after it's hit a bottom and it seems to be recovering, right?
Okay.
So you don't have to time the top. You only have to time the top and the bottom when the investment instrument that you're using is not that volatile, either in the variance and how much it goes up and how much it goes down, and that it's not that volatile in the time between peak to valley to recovery. So I think that Bitcoin is a very, relatively speaking, a very safe way to make phenomenal returns.
Okay.
Relatively speaking.
Yeah, no, I like that answer. That's awesome. And then, all right, so now I'm going to have to bring in the current macro environment because, obviously we've had the Fed raising interest rates at a historic pace. Obviously they slowed down a little bit on the last on the last Fed meeting. We don't really know what they're going to do going forward. At first it was thought maybe 50 basis points, 25, whatever. Either way, it seems like kind of, there's grim economic times ahead. Not just for the United States, but it seems globally. Do you take that into any, the macro environment, into any factors as to, when you invest, kind of how you're approaching these things? Or is it more so, you kind of have your strategy and you're sticking to it?
I have my strategy and I'm sticking to it, but it doesn't mean you deploy in a down market, right? So I think that I think, seeing as I'm on a Bitcoin podcast, I should talk about, I think that Bitcoin maximalists are just as arrogantly dumb and stupid as traditional finance, the cabal, the Bilderberg group, the one world government, right?
Yeah.
So clearly the argument amongst Bitcoin maximalists is that it is uncorrelated, unrelated to fiat. Clearly it's not true.
Yeah.
And I don't think enough Bitcoin maximalists admit to the fact that they're wrong. They're completely wrong. They're completely and utterly, fundamentally, totally and utterly wrong. Okay.
Well, yeah, I mean,
much the same way. Hold on a second.
Yeah.
Much the same way as all those people and Bitcoin maximalists who think that printing money causes inflation. That's wrong. It's completely wrong. It's completely and utterly and totally wrong. We need to stop talking about printing money causing inflation, because it doesn't, right? If since 2020, if we double the money supply and inflation is 8-9%, then they're not correlated. They're minimally correlated, but they're not correlated. And people talk as if printing money causes inflation, right? And if that were the case, then if you double the money supply, we should at least have 50% inflation, if not 100% inflation. But 8-9% inflation means there's no inflation, right? And I'll end with another point. Okay, I think that we essentially became untethered with the perception, right? The rules that printing money causes inflation, that we broke that tether, let's say. And I'm making, that analogy because of US dollar tether. Mm-hmm. In 2008, the most socialist president in the United States of America was not Barack Obama. It was, in fact, George Bush, because it was George Bush who bailed out the banks and printed money and created TARP and so on and so forth. Okay. So essentially, the American government then had the decision between the lesser of two evils. Don't intervene in the markets, let the markets find its own price point and so on and so forth, right? Which meant that the markets could collapse even further, or intervene in the markets, create artificial valuations for instruments and products and so on and so forth, and we'll have inflation because we're going to money print. Clearly, George Bush and then Barack Obama chose quantitative easing over austerity, whilst Europe chose austerity versus quantitative easing. Clearly, when you compare how America and Europe did during the crash and the recovery, Europe clean. I mean, America cleaned Europe's cock. I mean, America literally had its cake, ate it, and then came to find out that the cake had no sugar, no carbs, no gluten, and was filled with vitamins and calcium. And I mean, you could not ask for a better outcome, right? We printed tons of money, and we had some inflation in 2009, 10, 11, but that was really because of energy. We printed money in 2020, but then we got some inflation in 2021, 2022. But I would say that's more because in the middle of the pandemic, we stopped using as much oil and electricity and energy. And so, energy producers around the world couldn't turn off the pumps. And so, oil went negative. Like, producers were saying, come take the oil, right? And we'll pay you. Not that come take the oil and you pay us. They were like, no, please take the oil from us. We'll give you the oil and money, right? So it went negative. So the idea that inflation is caused by money printing is just wrong. So if you're trade finance, if you're traditional finance, or if you're, crypto, operating based upon that fundamental philosophy, seeing as we're in sort of crypto and coding, if the fundamental code is incorrect, of course, the machine's going to break down. Our markets and our economy are breaking down, not because of fundamentals, but because of behavioral economics. People are misinterpreting the fundamentals of the markets, and they're acting like scaredy cats. The problem with Silicon Valley Bank, right, is that it was a traditional finance bank with tons, like the majority of its depositors were crypto guys, were entrepreneurs who think that they're smarter than the markets and the economy, right? And so show a glimmer of weakness, and you got Peter Thiel saying, take your money out of the bank. That's not a stable deposit, right? Though their depositors they're not good customers. They're not good depositors. Silicon Valley Bank helped grow Silicon Valley and entrepreneurs, and those entrepreneurs turned on the bank like they forgot who fed them. But then, this is a free market, and Silicon Valley Bank's not a charity. So it can't rely on its depositors being charitable with their money. So, 6 of one, half a dozen of the other. There we go.
Yeah. Well, I mean, that's a lot to unpack there, but I do agree with you there that, Bitcoin maximalists try to say that, Bitcoin is not correlated to any part of the market, where it seems like it's almost obvious that it is correlated to risk on assets as defined by like traditional finance, so to speak.
But it magnifies. It's not just correlated. It goes up more and it goes down more.
Exactly. Yeah, you're nailing it on the head there. So I agree with you 100% there too. But you brought up an interesting point about like money printing and the overall like how we measure inflation. So I kind of want to dive into that a little bit more, because you said CPI is more so at, or the inflation is more at like 8-9%, right? And we essentially doubled the money supply and all that kind of stuff. But when it comes to that, do you think that inflation is more at 8 or 9% because of the way that we're measuring it, like the way that the CPI calculation is put out there, that basket of goods has kind of been changing? Or, is it more so based on, I think inflation from this past, from 2020 on is a little bit different of a case than maybe in 2008 time, because essentially we shut down the entire global economy for months at a time. And like, exactly like you said, right, these oil producers and other things like that, like, essentially they were handing around oil for free. And now, we're kind of, deploying oil reserves and other things like that. So the energy markets are becoming more expensive. But, I guess in your view then, with the money printing and kind of, all the things that I just talked about, then what do you think, I guess, is the main driver of this inflation that we're seeing right now?
Interesting point. So what does the word fiat mean?
I feel like this is like a trick question.
It's not a trick question.
Almost like unlimited, I guess. I'm not sure.
Okay.
Yeah.
is there a car company called the Fiat car company?
Yeah, there is.
Okay, so what does Fiat mean? I mean, it could mean the unlimited car company.
Yeah.
But Fiat means faith.
Okay.
Okay. So when America was a dollar-backed currency, you had faith in a commodity asset-backed currency because you had faith in the asset that's backing the currency, right?
Okay.
When your currency is no longer asset-backed, gold-backed, whatever, then it is a faith-based currency. Okay.
Yeah.
And what makes the dollar non-fungible, right? Essential is that you can only pay your taxes with the dollar, right?
Yeah.
So you can go to the government and say, I owe $100,000 in taxes. Here's $100,000 worth of gold. And the government will say, I agree with you that this is worth $100,000, but we don't accept payment in form of gold. We accept it only in forms of dollar, right? So what gives the dollar its strength is that you can only relieve yourself of tax burdens by paying your taxes with the dollar. Right? Okay. So when in 2008 and 9, okay, the markets were crashing. They were crashing because the fundamental asset was real estate. Real estate, baby. They ain't making any more of this stuff. Not like that crypto, not like that stock market goes up, goes down. Real estate, baby. They don't make any more. That's a real hard asset, right? So a banker lent money to a ninja, no income, no job, no asset. So the guy comes in, the ninja comes in and says, I would like $500,000 to buy a house of $500,000, which means no money down, right? And I have no income, no job, no asset. Why did the banker lend the guy money? Because real estate, baby, it's a hard asset. They don't make any more of that stuff, okay?
Yeah.
So the bank said, if I lend you $500,000, as long as you take that $500,000 and you buy a house with it, then I can take the deed of the house and it's real estate. You can't lose with real estate, right? Bear in mind, more harm is done not by the things you don't know, but by the things you think you know to be true that just ain't so. So when at the end of, if I don't know how many people listening to this podcast, but if you Google CDO, which stands for collateralized debt obligation, if you Google CDO Wired magazine, right? The magazine, Wired magazine, you'll find an article that says, the equation that sunk Wall Street. Essentially, this guy was saying that you shouldn't issue loans based upon the person's credit rating, the person's history of paying back its debts. You should issue loans based upon whether the interest rate on the loan is above or below the capital appreciation of the asset. So if interest rates are low, which they were low back in 2008, let's say 4, 5, 6, 7%, if real estate's going up by 8, 15, 20, 25%, then issue the loan, because even if the person doesn't pay you back on the loan, the underlying asset has appreciated in greater value than the interest rate, right? Yeah. And even if the person has a great credit rating, if inflation is 20%, but real estate prices are going down in value, then don't issue the loan, because the guy's going to be smart enough to go, why pay more than what it's worth?
Yeah.
Okay. So this equation was essentially saying, you've got it all wrong. Stop issuing loans based upon how creditworthy the person is. Only issue loans based upon whether the appreciation of the asset is above or below the interest rate. Okay. So that is why banks were lending money to people who couldn't afford homes, because they thought that they could always take back the house, and the house would be a safe asset and it would never depreciate in value. So the crash of 2008 was almost as bad as 1929, but not quite as bad. And from 1929 until 2008, we'd had some doozies, right? We had the savings and loans crisis. We had the dot-com bubble in 2000, the crash of 87 and 89. I mean, we had some crashes, right? But the crash that rivals 1929 is caused by real estate. Like the safest asset is what caused the crash. Okay.
Yeah.
So I know that we're answering the question about inflation, whether we should believe inflation, right? So when we had 2008, what was happening was that people were losing faith in their home, in real estate, in banks. And so when the government intervened into the market, right, and essentially drew a line in the sand, an arbitrary line in the sand, right, like the borders of a nation, a line in the sand.
Yeah.
Here and no further. Like, come over here and we will defend this piece of land to the death, right? So when the Fed essentially drew a line in the sand and said, this is as low as you can go in beating up and punching and kicking the American dollar, we're going to fight back and we're going to just throw a ton of cash at it, right? Now, when the government throws money at a problem to achieve a solution and achieves its solution, you can complain, which, you know, Americans loved. Everybody loves to complain about their country, right?
Yeah.
But what Americans don't realize is that what makes, in my opinion, what makes America a great nation is not freedom, because there's freedom around the world, right? And not many of the things that, okay, what makes America a great nation is that this country can waste more money than other countries can save. That's what makes America great. And I'll give you an example, right? Because Kennedy got into a pissing contest with Khrushchev about going to the moon, we created NASA. And because of NASA, we got the non-stick pen, Teflon non-stick pan, and we got the Tempur-Pedic bed. And guess what else we got? We got the internet. Al Gore is a father, not the father, is a father to the internet. It's because Al Gore spent money, right? As a congressman, not a senator, as a congressman, gave money in his science subcommittee, you know, that they created the internet infrastructure. But had Al Gore not done that, I'm sure some other country would have invented the internet, right? And when, you know, when America makes a movie that pisses off Kim Jong-un, you know, with Seth Rogen or whatever, we could turn off the internet to them, because guess what? We invented it.
Oh my God.
So Americans, do you know who hates America the most?
Everybody.
Americans.
Yeah.
Okay.
That's fair.
The people who attack America the most are Americans. It's not ISIS, because there's so few of them, right? Americans rag on their own country. And I think America is a great nation. So when the American government threw money at the loss of faith in our economy, in the dollar, it essentially propped up the dollar. And that propping it up was sustained. And now that it's getting dinged because of Silicon Valley Bank, you know, the Federal Reserve and the FDIC is sort of saying, you know, we'll protect the depositors, but all the investors, all the shareholders in Silicon Valley Bank, they're going to get wiped out.
Yeah.
Right. So quite simply, I think that inflation is relatively negligible. You can't say that it's being manipulated by the government, because the government is not that omnipotent, right? It's not that powerful. It's barely omniscient. It's not all knowing, right? It's not all powerful and it's not all knowing, but it is somewhat omnipresent. It is nearly everywhere. And the question that we have to ask ourselves in the crypto community is, do we benefit from the government's omnipotence, its all presence? I mean, it's all power, right? Do we want the government to be all knowing? I'll give you an example, right? I work in finance. And I think it is unfair that we treat people in finance differently than we treat people in the legal profession and the medical profession. Because if a criminal comes into the hospital, they have a right to medical services. If a criminal comes into the law offices, they have a right to legal advice. Why is it that if a criminal comes to a finance professional, we're not allowed to give them financial advice? That is unfair. And it is, and that Americans, that we acquiesce, that we say we want to cut down on money laundering, we are eroding our own rights to privacy of our financial transactions. So we, as a society, as a nation, we need to come together and figure out, where do we want the line to be about the government knowing my financial privacy, right? But also for the ability for the government to disrupt the financial underpinnings of criminal elements. But that's a question that is not black or white. It's a question that we're not really asking. And the original question that you asked me, which was about inflation, I'm telling you, we've had minimal inflation. We've had, 7 times the amount of money being printed since 2009, and inflation has not, we've not gone up by 7 times. I don't think we've barely broke 100% since 2009. So, I understand the question that you're asking, which is the CPI being manipulated? And I think that it's easy to complain and to bitch and to moan, but macro-wise, I remember when I was in college in 2000, the McDonald's hamburger cost $1 in 2000. Now it's 2023 and it's like $1.39 to like $1.79. That's reasonable inflation for 23 years. I mean, that's very reasonable inflation. So inflation is really not the issue. And the beautiful thing is, like I said to you, it's not what you don't know, but it's what you think you know to be true that just ain't so. So when you predict that we're printing too much money and we're going to have inflation, then don't act like Silicon Valley Bank and buy low yielding, long duration assets, right? Hedge them.
Yeah.
That's the real issue. It's not, is inflation good or bad, but can we predict if we'll have inflation, and to what degree will we have inflation, and how do we adjust for that inflation? Because inflation is like the weather. You cannot defy the weather, but you can predict it and accommodate to it.
Yeah.
There we go.
That was awesome. Well, I don't want to take too much of your time here today. So, I mean, I'm normally rotating people in here like every 30 or so minutes. But I mean, that was awesome. I love that explanation. Do you have like an internet presence? Are you on Twitter? Do you have a website or anything like that? You're just kind of around? Nope.
Barely have any presence. How many people are on this show?
Well, I mean, we get like a couple hundred or so that listen on YouTube and on Twitter. So, I mean, I'm just kind of basically highlighting what's going on here in Austin this entire week. So I've been doing live streams Monday, Tuesday, Wednesday, and then today, obviously. And just, having people pop in and out and talk about like the interesting people that are coming into PlebLab. And this was probably the most fiery conversation I've had yet so far. So I've really enjoyed it. I do have a podcast that has, a few thousand listeners that comes on once a week that I would actually love to have you come on at some point in time. So I'll have to get your information or something like that after I'm done here today. But I really appreciate you coming on here, man.
Sounds good.
Yeah. Ciao. It was great meeting you.